we saw the Fed doesn't really have total control of the market. The Fed just kind of sets the benchmark. Now, that said, the Fed does matter because it's not just interest rates, it's also the QE and QT portion of it. The first thing they'll do is not lower interest rates. The first thing they'll do is they'll back off that $25 million or $25 billion that they're letting mature off the balance sheet each month, and their current QT rate, the current QT run rate. Now, it's really more symbolic than anything that they're doing that, because it's not a lot. That's not a lot of money. But if we see any problems in the repo market, if people need dollars and there's just not liquidity there, there's a lot of liquidity got sucked out of the system going to the end of last year. There's no money in the reverse repo anymore. That was excess capital sitting in money market funds. Now they're all in T-bills, right? The money market funds still use T-bills, but they're not using the overnight repo rate anymore. So it's just a little bit less liquid. T-bills are pretty liquid, extremely liquid, but it's not as liquid as the reverse repo. So now you've got, that's gone, and the bank balances are down to 3.2 trillion. And if you look at the bank balances, the Fed starts to get nervous when the reserves at the banks, when they fall down to under 10% of GDP, they start getting nervous, which is about 2.9 trillion now, right? So, I mean, GDP is about $29 trillion, maybe almost 30. So it starts getting down to $3 trillion. The Fed's going to start getting nervous that there's not enough liquidity to allow for movement of large pieces of capital within the financial system. And so we've seen this movie before, where you have a kind of a liquidity crunch, and it begins to affect the US treasuries. And so that's where the Fed really steps in, where they're worried about liquidity short term for treasury auctions. Or for just the treasury market in general. And so, the issue here is that as we continue down this road of keeping the interest rates where they are, continuing the QT, and then we're coming into tax season here, April, we're going to have people selling assets to meet tax liabilities and demands. That's the question. Do we get into a liquidity crunch where the Fed feels like they have to step in and start QE again, which they did before March of 2020. They did it in the fall of 2019 because of exactly this. They had a liquidity crunch, and they need to step in and add liquidity into the markets by printing money and going in and buying treasuries themselves. That was providing liquidity to the markets. So that's the question, is when does that happen? It's not happening yet. As you can see, there's been no blinking at the Fed today. Look at the NASDAQ, it's down from over 20,000 down to 17.5. So, it's down over 10% here, and 12%. And so that's been a pretty good drawdown. But that's all that has to do with all this uncertainty. There are a lot of people here wondering, well, okay, got all that. We've got the big picture. Is that what is driving Bitcoin down? Okay, well, Bitcoin is a particular beast, right? So last week, we had the announcement of the new strategic Bitcoin reserve. And that's a big deal. And there was a really big deal. And it was an executive order signed by Trump. I actually wrote all about it in my newsletter. The crux of it is that the most important parts are, okay, Bitcoin they've established a strategic reserve. Number one. Number two, they mandated that no more Bitcoin is sold from the government, holdings. So they're going to hodl. That's number two. Number three, they're not going to buy any more outright. There's no plan to just go and buy like 200,000 a year or $1 million or $200 billion worth or $100 billion. There's all of the possibilities that people had run through and expected something announced about how much they're going to buy, when, how they're going to do it. Well, that was all tabled. And they said, we're not out there buying any right now. That's just not in the plan. And so because of that, the market sold off. They did say that they would buy Bitcoin if it was budget neutral, meaning if it didn't require tax dollars to go out there and buy them. So if they could use something else in the budget something else on the balance sheet to sell and offset that the cost of buying more Bitcoin, then they're looking at things to do there. Well, what would they do there? Why would they do that? Well, they could do things like they could sell some of the stockpile, the digital asset stockpile that they also announced at the same time. And that is the different cryptocurrencies that are seized from law enforcement, the government entities, when there's some sort of illegal or illicit activity. Things like Solana and Ethereum and XRP from illegal activities, they'll take those and they'll put that into what's called the digital asset stockpile. But they're not planning on buying any of those either. And there's no plan to buy those at all. There's no plan to buy those in a budget neutral instance. It's just there's no plan at all to buy those. So it would make sense to me that that's the first place that they would go to kind of seize those, have that stockpile, maybe sell those off and buy Bitcoin with it at some point. I don't know when or how or whatever. They could sell other things, they could sell gold, they could sell land, they could sell cheese, whatever they want. According to this, they could sell oil. I don't think they're going to do any of that. That would be budget neutral, but I don't see that. I could see them doing other things and figuring out other ways to buy it, budget neutral, but still that disappointed the market because there was no announcement that, we're going to go buy $100 billion on an executive order, just like the Gold Act. We're just going to go and put it in a strategic reserve because it's important to have on our balance sheet. They're not doing that. They're also not going to just say, we're going to buy 200,000 Bitcoin a year, like Senator Lummis's bill, the Bitcoin Act says. Is that possible to still happen, to get the Bitcoin Act passed? Maybe. I mean, I don't know what their plan is there. But the reality is that right now it disappointed the market. Why did it disappoint the market? Because we didn't get that plan to buy a bunch more. So the price of Bitcoin, while the whole market is rolling over, while it's already reached all-time highs and had that euphoria of the Trump impact of the new administration, a positive administration, you've got the ETFs, you got the ETF options, you've got SAB 121 repealed. We're going to talk about that. You've got the gap accounting rule change. Now you've got the ending of choke point 2.0, hopefully soon. I still have seen some things in my hedge fund that suggest it's still happening, but hopefully that ceases very soon. And regulation around all this, regulation around stable coins, regulation around which of these cryptocurrencies are deemed tokens and which are deemed assets, and all of that stuff. Like Bitcoin is the only one that right now is deemed as a commodity. So really, really important to have that clarity. So those are all tailwinds for Bitcoin. So why is it selling off? Well, it reached all-time high. It hit that $100,000 mental level, and it stayed up there for a little while, and then it sold off. And once it broke back through 100,000, now that becomes a resistance level. And so it's a mental level, it's a major mental level. You had a lot of from what I understand, there are a lot of OGs that have sold around the $100,000 level. They've been holding on to this thing forever, and they've made massive, massive, massive amounts of wealth in US dollar terms that they can go and turn around and use to buy other assets like houses or planes or boats or whatever they're going to do. And so they're cashing in. They're going to go enjoy some of that they held on for so long. And that's what it appears to be happening from what I know. So, however, still price wise, why would it sell off from, 90 something thousand down all the way down to 80,000 from after the news that the strategic Bitcoin reserve was established? In the price of Bitcoin, clearly there was an event-driven trade going on where you had short-term investors looking for this to pop, meaning Bitcoin to run back over 100,000, go to 120, 150, whatever they had calculated in. And they expected that to happen if and when a strategic Bitcoin reserve was announced, along with a purchase plan. But the purchase plan wasn't announced. So whatever amount that they had mathematically factored into the price of Bitcoin had to be taken back out. So just to keep everything simple, if Bitcoin's at $100,000 and these momentum players thought that it could trade to $150,000 if the Bitcoin reserve is announced with purchases, then that's a $50,000 move. Okay. Well, if they figure, well, let's just say it's 80,000. It's trading at 90,000 because that's where it was. That, in that $90,000 is the probability that that price would go to $150,000, whatever that probability is, 25%, 30%, 50%, whatever it is. Well, that is telling you that if it was trading at $90,000, that there was a 50% probability priced in that it would trade back to 100 at least, right? Because 50% probability of a trade to 110, let's say, 50% probability would mean that the price should be about $100,000 that's expected to go to. Well, it didn't. So you've got to extract that back out of the price. You got to extract that probability that's embedded in that $90,000 price out. And so that takes it back down by that amount. So that's the problem, is that was in the price and now it's being taken out at the same time, Brandon, that you've got all this uncertainty going on. And Bitcoin has acted like the leading risk indicator for a long time now. Whether or not it should be, whether or not that we believe it is, it's what the market believes. And the market believes that it's a risk asset right now. And so it's going to treat it like that. And so when people get margin calls, they sell it. They sell this along with other risk assets that give them liquidity, especially over the weekend. When you come into a week that you expect, some downside volatility in the market, what are you going to sell? Well, the only thing you can sell is Bitcoin because it trades 24/7. And so they're able to do that. That's a long-winded answer of why Bitcoin traded down, but the simplified version is, well, embedded in the price of Bitcoin last week was the probability that this Bitcoin reserve would be announced with some sort of buying strategy. It wasn't, so that had to be extracted from the price, and here we are.
We touched on SOB 121. You just tweeted out about one of the biggest catalysts this year being banks lending against Bitcoin, or helping people do that. So I'd love for you to touch on, SOB 121 and just the impact that banks affecting sell pressure and what's going to happen here with banks lending against Bitcoin.
If you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.